Ever wondered why your friend, earning the same as you, seems to have a completely different tax experience? It's a common puzzle, and the answer lies in understanding how various income types are treated by the tax system. This video will demystify W-2, self-employed, and side income, providing clear insights for everyone from new employees to seasoned business owners. The tax system doesn't just look at how much you earn, it focuses on how you earn it. This fundamental distinction is crucial for financial literacy and effective tax planning. Income can originate from diverse sources, each with its own set of rules and responsibilities. Whether you're an employee, a business owner, or juggling independent gigs, your tax obligations will vary. These differences are not arbitrary. They reflect the distinct roles and responsibilities associated with each income stream. Understanding these nuances is the first step toward mastering your personal finances. W-2 income is what most traditional employees receive, signifying an employer-employee relationship. For this income type, your employer plays a significant role in managing your tax obligations. They are responsible for withholding taxes directly from your paycheck. This means a portion of your gross pay is sent to the government on your behalf for federal income tax, state income tax, if applicable, and FICA taxes, Social Security, and Medicare. What you receive is your net pay after these deductions. This system is designed for predictability and ease for the employee. The withholding process makes tax payments gradual and often feels largely invisible to the employee. It ensures that taxes are paid throughout the year, reducing the likelihood of a large tax bill at year-end. For new employees, understanding your pay stub and these withholdings is a key part of onboarding. Your employer also contributes their share of FICA taxes, matching your Social Security and Medicare contributions. This shared responsibility is a defining characteristic of W-2 employment. While taxes are handled, employees still need to review their W-2 form annually and file a tax return to reconcile their actual tax liability. Self-employed income, earned by independent contractors, freelancers, and small business owners, operates under a different framework. When you work for yourself, you become responsible for managing your own tax payments. There's no employer to withhold taxes on your behalf. A significant difference is the self-employment tax, which covers both the employee and employer portions of Social Security and Medicare taxes. This means you pay the full 15.3%, 12.4% for Social Security up to an annual limit, and 2.9% for Medicare on your net earnings from self-employment. This often makes self-employment feel more taxed than W-2 income. However, it's not necessarily higher. It's simply more visible. You are now directly seeing and paying the full cost that was previously split and partially hidden by an employer. Self-employed individuals are also typically required to pay estimated taxes quarterly to the IRS and state tax authorities. This proactive approach prevents a massive tax bill at the end of the year and avoids potential penalties for underpayment. Effective record-keeping of all income and expenses is paramount for self-employed individuals to accurately calculate their tax liability and identify eligible deductions. This is a critical aspect of running a small business. Side income, often earned through freelance work, gig platforms, or contract jobs, frequently blurs the lines between W-2 and self-employment. While it might seem like extra cash, it's generally treated as self-employment income for tax purposes. This means it's usually taxed without any withholding. For example, if you earn over $400 from a side hustle, you'll likely owe self-employment taxes on those earnings. If you receive over $600 from a single payer, they might issue you a Form 1099 NEC or 1099-K, reporting your income to the IRS. This income must be reported on Schedule C, profit or loss from business, of your tax return. The lack of withholding for side income can lead to unexpected tax bills if you're not prepared. Many individuals are surprised to find they owe taxes on their side gigs because they didn't set money aside throughout the year. This highlights the importance of financial literacy for anyone engaging in independent work. Proactive tax planning, including setting aside a percentage of your side income for taxes and potentially making estimated tax payments, is crucial. The tax system assumes that with greater independence in earning comes greater personal responsibility for tax compliance. These distinct tax treatments are not arbitrary. They are rooted in practical and administrative considerations. The tax system assigns responsibility based on who controls the work, who controls the payment, and who is best positioned to realistically withhold taxes. This structure ensures a functional and enforceable tax collection process. For W-2 employees, the employer acts as an intermediary, simplifying tax collection for millions of workers. This centralized approach reduces the administrative burden on individual taxpayers and ensures a steady flow of tax revenue. It's a system built for efficiency in a traditional employment model. For self-employed individuals and those with side income, the direct responsibility shifts to the earner. This reflects the greater autonomy and control they have over their work and finances. The government relies on these individuals to accurately report their income and pay their taxes directly, often through estimated payments. Ultimately, these differences are structural, not moral judgments on income types. They reflect the varying relationships between the worker, the payer, and the government. Understanding this framework helps demystify why your tax experience might differ from someone else's, even with similar gross earnings. No income type is inherently good or bad from a tax perspective. Each simply comes with its own set of mechanics, timing requirements, and visibility regarding tax obligations. The key to navigating the tax system effectively is understanding these distinctions. Once you grasp how your specific income streams are taxed, much of the confusion and anxiety surrounding taxes can fade. Taxes stop feeling arbitrary and start feeling explainable, allowing you to plan more effectively. This knowledge empowers you to make informed financial decisions, whether you're an employee, a small business owner, or a gig worker. This foundational understanding is vital for financial literacy and can significantly impact your financial well-being. It allows you to anticipate tax liabilities, budget accordingly, and avoid unwelcome surprises at tax time. Understanding how your income is taxed is a powerful step towards financial empowerment. Don't let tax season catch you off guard. Here's what you can do. Review your pay stubs. If you're an employee, regularly check your W-2 pay stubs to understand your withholdings. Plan for self-employment. If you're self-employed or have significant side income, set aside a portion of every payment for taxes and consider making quarterly estimated tax payments. Keep meticulous records, regardless of your income type. Maintain excellent records of all income and expenses. Seek professional advice. Don't hesitate to consult a tax professional for personalized guidance, especially if your income sources are complex. Take action today to gain clarity and confidence in your tax situation. Your financial future will thank you.